Howdy, folks. This is Darius Dale here to present our macro minute for Tuesday, June 14th, 2022. Starting with markets, we have stocks up this morning, commodities mixed with crude oil leading, crypto down, dollar flat, global bond yields mixed with US and UK rates lagging. Market moving headlines, the crypto bubble is unraveling quickly. Pardon my voice here. Prices dropped more than 10% below 21,000 before pairing a lot of the slide. UBS said most long-term holders are now in the red and warned of more mayhem if coin miners themselves start selling. MicroStrategy is also being closely watched as they may be forced to offload holdings at 20 to 21,000, according to Interactive Brokers. Number two, consensus can be right too. Investor fears of stagflation are the highest since 2008, while global growth optimism has sunk to a record low, according to Bank of America's monthly fund manager survey, which was done before Friday's CPI print. Investors were long cash, the dollar, commodities, healthcare, resources, and high quality and value stocks. They were short bonds, European and emerging market stocks, and tech and consumer shares. So, this is a lot of what we've been seeing on the tape in terms of the market leadership and laggardship. So, consensus is generally getting this one right. But obviously, somebody's got to be taking the pain out there. Jay Powell needs to step up and protect his legacy. Our third bullet here. So most economists and analysts expect the FOMC to give some thought to a 75 basis point rate hike tomorrow, even mooting the possibility of 100 basis points. If you look at Fed Fund futures and OIS pricing, we have nearly a 90+% probability of a 75 basis point hike tomorrow. So this is an opportunity for Jay Powell to step up and protect his own legacy, protect the legacy of his Federal Reserve, and do whatever it takes, if you will, to prevent, sort of becoming the next Arthur Burns. If you recall, Arthur Burns was the Fed chair in the 70s that let the inflation genie out of the bottle back then and kept policy way too loose consistently relative to the supply and dynamics in the economy. I think Jay Powell gets it. I think he's very serious about tightening the liquidity cycle and draining some excess demand out of the economy. The likelihood that they engineer a soft landing has always been a low probability, one, based on history of the Federal Reserve tightening cycles, but also based on the fact that we're starting this process very late in the business cycle as relates to the unemployment rate dynamics. It's very hard to get a soft landing when you start tightening with the 3.6% unemployment rate, well below historical means. Big movers this morning. Bitcoin down 3.5% to minus 24% month over month. Shanghai Composite up 1% to plus 7% month over month. And then USD, I thought this was interesting. USD 2-year and 5-year forward inflation swap rates down 12 basis points apiece day over day to 4.59% and 2.56% respectively. So the inflation swap market is really moving in the direction of the Fed getting incrementally tighter. So we'll see if that gets confirmed in tomorrow's FOMC meeting. It likely will be. Shifting to our volatility adjusted momentum signal and probable range processes. US dollar that remains bullish VAMs. It's overbought here with 3.3% downside to the low end of the probable range. Gold bearish VAMs here, kind of in the middle of its own range, minus 1.8% downside versus 2.8% upside. 10-year nominal Treasury yield bullish VAMs also overbought with 46 basis points of downside to the low end of the probable range. High yield OES neutral VAMs likely to break back out to bullish soon with its overbought as well with minus 126 basis points to the low end of the probable range there. S&P 100 that flipped back to bearish VAMs after a couple of days of neutral. That it's oversold here with 9.7% upside. VIX neutral VAMs that's overbought here with 33% of downside to the lower boundary of its probable range. NASDAQ bearish VAMs oversold as well, nearly oversold as well with minus 0.9% of downside with 11.5% of upside. Russell 2000 neutral VAMs it's oversold as well with 13% of upside to the upper boundary of the probable range. Bitcoin bearish VAMs deeply oversold here on our probable range process with 38% of upside. Ethereum bearish VAMs also deeply oversold here with 50% of upside to the upper boundary of its probable range. Doubt we see that. Shanghai Composite neutral VAMs, it's likely to break out the bullish. I mean, again, we talked about this on the program last week, a couple weeks ago. It looks like somebody big in institutional land is very much putting on some long China exposure That's something we would support from a fundamental research perspective. Bullish WTI crude oil, minus 7% of downside versus 4% of upside. And then lastly, ag neutral VAMs in the middle of its probable range with 2.9% of downside and 4.1% of upside. And then industrial metals, bearish VAMs minus it's oversold with 7.4% of upside to the upper boundary of its probable range. So with that, Darius Dale presenting our macro minute for Tuesday, June 14th, 2022. Best of luck out there. Cheers.